Good morning. Let's get the charts up here. Okay. So we started yesterday with the thought that there was going to be some choppy price action with all the support that was down below as the markets were gapping lower and threatening to go down, and they held. They held that prior support that we were looking at yesterday. Right? So we simply looked at where prices were trading as they were opening lower. We just looked at the prior day's low, and it held. And essentially, while it peekabooed above the high, intraday, it did have that rally day after things got going there after lunch. It perked up. So one of those situations where, well, if it's not going down, I guess it's going up. And as it held there and chop, 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 chop. And one of the things that I had mentioned yesterday throughout that chop as to what was going to continue to put a limit on the upside was the extreme low. Well, I guess it wasn't really that extreme, but it was around 0.74 or so, the put call ratio. So it was below 0.8. Anyway, it started low, it went lower. And then a little later in the day, it just started to trend up as the markets refused to go down. And, it just kept trending up. So the bearish sentiment continued to move higher as the market did, which was good as the market started to go higher. But overall, it really didn't do anything of significance since it's still trading within this trading range. And as we begin the day here, we got this little M top going on. Well, that was actually from yesterday. That's the one that Dan mentioned yesterday. And I got a few shekels out of that. So in a way, it worked out. Didn't tank as it would have been nice if it had. But anyway, markets are just up here close to yesterday's high, looking at the spiders here. So they're just holding on up near the top of the range, which is bullish for now. It's going sideways at resistance. And so the first line in the sand would be yesterday's low. So if it can break below yesterday's low, well, that opens up the door to some downside. I wouldn't say anything of significance since, but if it should get down here, you can just take this into the rest of the week that if you see the spiders down here around this 280 level, just figure something's going wrong at that point, because that's the area of last week's low, which was, a pretty decent green bar negating this topping tail bar. So to come back down here would be 100% retracement of last week's advance, which was bullish, ignoring this topping tail bar. So a round trip back down has got to be bearish. Okay? So pretty simple. We'll just keep an eye. Right now, this churn up and sideways price action at resistance supports I wouldn't say a strong bullish bias, but a somewhat neutral to bullish bias based on the price action to say, yeah, that can get through there. Even if it spends another day today chopping around, which would build this intraday area here. And if it stays up in the top of this range, or even if it dips down and comes up, that would be even better. Because another dip and evidence that buyers are stepping up and driving it back higher again, that type of price action would support that it could go higher. And then, of course, we say, well, higher to where? Well, you would think 300 should be easily the next stopping point, which isn't that far away. There's this unfilled gap, the 311 area, so we just see first, let's see if it can get through, let's just call it 295. If it can get clear there, and then we'll just see what it does at the 200 MA and the whole number. Down below yesterday's low, well, maybe the party's over. And let's go to the Qs and then we'll look at the futures. Pretty much, for this morning, we've got similar types of price action. The Qs were showing that relative strength as they have been right along. They gapped down yesterday and the buying started right off the bat. And where the other markets, say the S&Ps, the Dow, the Russell, were just kind of hanging out like, okay, just let us know when to press this accelerator to the downside. The NASDAQ was saying, hold on there, fellas, it ain't happening. And so the NASDAQ just kept moving up, and we've got a little breakout bar. And it broke out about one day. Ideally, when you get at least 2 or 3 days, but in any event, you had a continuation to this, gap up, gap up, gap up, gap up, and now a gap down that got bought. And so now we've got a wider range bar. So a wider area to potentially trade within, and really do nothing to damage this upward move, because unless it goes down to yesterday's low, and ideally it won't go down even to halfway part of yesterday's range, that's just consolidation within a bullish move. So we'll just have to see how it unfolds. Right now it's below yesterday's high, just trading up here, consolidating. This trade is just saying, hey, what's it going to do? Is the party going to continue here? Or, is this market that can be treacherous have something else in mind? We'll have to see how that unfolds. The Russell had an inside day, really didn't do much. Like I said, it was hanging down here, just kind of waiting for the break that never occurred. And then traders, institutions, whatever, just said, well, it's not ready, better buy. And it stopped up near the high there and just kind of fizzled out. As you can see, it's kind of churned around there after 130 or so. It topped out and sideways, little downward slope, and here we are at 132. And so neutral open. And we see positive numbers here, but this open is neutral because it's really not taking out any highs. It's not taking out any lows. It's just in between reference points. So the transports were a bit weaker, but just inside of yesterday's range. And same story. Can it get above the high? Does it take out the low? Ultimately, last week's low down here is the significant line in the sand. And if it can get above yesterday's high, which I suggest you make an alert, just even if you're not trading transportation stocks, but you might be looking at something and saying, I wonder if things can get going here. And maybe the transports would actually be the lead and perking above that high. And if that was to happen, well, that's positive. And then you better start seriously looking at, hey, what's going to continue here? Or maybe I should look at a stock in the transportation index that might do well. Because this has got a nice size void to move up toward that high if that could actually happen. Now we'll keep an eye on that. The Dow, this is the one that just tends to do a lot of lagging, and you can see how it backed off from the high, but pretty much an inside day, a narrow-bodied bar, a lot of going nowhere, and so it's up there. It's up there toward the top of the range. The same thing. So sideways, choppy price action, and we start the day again with, can it take out the prior day's high or low? Which way might it go? May I sometime later, can we look at TLT? Gary's asking me. Well, TLT is essentially looking at bonds, which we always do. And so bonds have been relatively flat within this range. They started to move down, and then they eventually stabilized. So look, everybody, I mentioned this yesterday, the world is expecting the Fed to keep interest rates low. Now, low is a relative term. They are low. So even if they went up a little bit, right, here's the 10-year. You can see this kind of action where it's been stable here and this 180 reversal and back up. So even if they went up a little bit, that really wouldn't change very much. But when you've got the herd thinking and making sizable bets based on interest rates staying low, that the Fed is going to do that. Even if the Fed takes their foot off the gas pedal for a little while and this perks up a little bit, it could have the market jitters begin and start a sell-off. So you should keep an eye on either bonds or interest rates. You mentioned TLT, which is the ETF for bond prices. And so if these were to start moving lower, where interest rates would go up, that could spook the equity markets. Well, that's TBT. You can keep an eye on TBT or TLT. And so, with everything else that we keep an eye on, I mean, you don't have to stare at the chart, but hey, look, set an alert. It's as simply as, you go into your platform. Some are different than others, and, hit it. I'll close. My alert is set there, and on this platform, I can move it up or down wherever I want it, or adjust and put them on one below. So setting alerts are easy to do. Setting too many will probably annoy you. So keep that in mind. Sometimes you just start getting all of them going off at the same time. All right, so futures, looking at the complete charts, got a lot of the same analysis here. Trading range going nowhere, up toward the top here. There's going to be sellers here. Upside theoretically is limited, so is the downside. That's what we were expecting yesterday. There was that move up toward resistance. So maybe the market's waiting for another shoe to drop on something, but again, sideways at resistance is considered bullish unless it breaks lower. So far, it's not breaking lower and it's not breaking higher. And Qs, we looked at the Qs there. Similar story. They're marching up. Inside days so far. Weekly, the big green bar. Unless it takes that low out, right? The idea is it should continue to go up. That being said, look, as we always do, and we've got it on other charts here, the other reference points. So, that blue line, I don't know exactly where it lines up. I don't know if I can move this now. No, it's not going to, whatever. It's not going to be a straight line. Just arbitrarily just look at this and say, hey, wide range bar. It shouldn't go break down below half the range of that bar. Just an arbitrary point. You don't have to know the number. You can just eyeball it. But let's just, I don't know, what can we call it? Yeah, breaking below that whole number of 9,000. And I guess that's the midpoint right there, the lower that bar. You get these breaking down below 9,000 rather than staying up here going sideways. Maybe it's the beginning of some kind of corrective action. Right? So we want to stay objective. You have to know our reference points. Dow futures sideways here, same story. Really nothing much to change. You can see the same sideways price action. The Russell, same sideways price action. If it can take out yesterday's high, well, the next stopping point isn't that far away. But it could be a tradable event. Ideally, what we'd be looking for here is some attempt to move lower that springs right back up again. So we look at price patterns. We're price pattern readers, right? No indicators, no diagonal trend lines, no fib lines, no hocus pocus. Hey, we look at the price action and we look for clues like a bottoming tail bar, like a red bar being ignored. That type of price action at resistance would support a bias that this could go up to the next stopping point. And we do that in multiple time frames to assess what's going on. And then, hey, where does it go wrong? Well, right now it's that blue line. That's where it's been holding 3 times down there and it's held. A break below there, something must have changed. A lot of technical analysis is just common sense when you know what to look at. But when you start putting on your stochastics and MACDs and all the other flavors and choices that you have, which are endless, things get confusing. So I say, just simply look to the left. Keep it simple, stupid. Gold. Sideways. They're waiting too. Everybody's waiting. Oil. right? A little more bullishly, but topping tail being ignored. Not totally like, let's jump on board this year, but oil acting well, close to resistance, and it's refusing to go down. We already looked at bonds, silver. Could get interesting if it clears these highs. So we've got these little trading ranges going on everywhere, right, to different degrees. So there's clearly a good amount of uncertainty in the markets. However, there's a lot of stocks here and there that are doing their own thing to the upside or the downside, and Dan will cover some of those with you. So it's an interesting time, no doubt. And well, the last thing, I sent out a chart earlier today, and this is the first time since the market low that we have internals. Well, this one won't go down everything, but we have our market internals in agreement here at a bearish level. Where breadth, well, up here, I told you this was bullish when it came off of the low, and it came here. And we were looking for market turning points when it came down here. And at no point in time did we have sentiment pushing into this lower band here. Now, it doesn't mean it's got to go down today, tomorrow, or the end of the week, but we know risk is now rising historically. These are excellent measures for when risk is rising and opportunities are rising where the market's been going down. This could certainly go higher and push up to that static 0.80 level. We'll just have to see. I said, right now we've got this trading ranges going on, but just to report, this moving average did push into that beginning of the bearish level. And look at the breadth, right? Yesterday, the NASDAQ was going all by itself. So first lower high in breadth. We'll just have to keep an eye on this. This is a moving line, of course, each day. If the markets did pop up, this could come up, but it would come up into still being an extreme level. And that moving average would push even closer. So whether it's today, tomorrow, or next week, you have valid information to know that risk is increasing on the long side. And,
but Craig, I've never heard you say the lower high in breadth is at a bearish extreme in alignment, as opposed to it being at the upper levels over the horizontal line.
Well, the extreme starts at 100, Dan. 200. So these red lines mark the extremes. So this move off of the low, and why I said this one is actually bullish back when it came off of the low here, because it went from a low all the way up to 200. And then it went even higher, which was a positive, right? That was in April. And it came down again. So up in this area is an extreme. And if we went back and scrolled back in history, you would find that you would not have pushes up to plus 300 area back then. And the extremes where market turning points have been, you would find reference points where it was just like this, up above 100, and sentiment came up into the red area and the market turned down days to a week or so later. So you have this is because of the high points going so far above. You won't find other points in recent history where it went up to 350 or wherever that is. I'd have to expand it again. You won't find that.
And similarly, on the downside, we saw those crazy negative 400 readings, which is what's got us so bullish.
I've seen bear market drops, not quite at 400, but I've seen minus 320, 350. So that wasn't that unusual. It was unusual that it happened so fast. Typically, it happened near the closer to the end. Not where this never happened. New all-time high and a 35% drop in a couple of weeks. That's never happened. But so what typically happens is that last drop happens at the end of the move, and you get a bullish divergence in breadth and sentiment. rather than it making new lows. But anyway, it's 3:22. We're running late. All yours.
All right, thanks. And we actually have a lot of opens and still a lot of earnings, so I'm not going to go over the opens. They're all doing fine. Unless you have a specific question, I'd rather go look at some new setups. Chesapeake here, in the paper, it says they might not make it, and the chart told us that. You know, this thing's done a couple of reverse splits, but it looks horrible. It looks like a core short here. CHK. SDC for Jake. You got to tell me what you're looking at, Jake. The entry was yesterday, and now it's gapping up 10%, and there's no pattern. So it's, you know, I'd be trailing, selling into strength, not really looking for a new setup. DIOD, I see a print way down here, but it's not very liquid. ERI, Delta Casino stock. We've been watching this in the beat up sector for a while. I think we actually went bottom fishing in many of these beat up sectors. And we got a nice 3-day run out of them. Still dead money, but gapping up. We'll see if anything can happen there. And I think Caesars has rebounded a whole lot better. 985. That is room. 1050 to 11. I'm gonna put that on my list. Caesars. Lou. KNX. I can't tell where it's gapping. It's just bullish trading range on the daily. SFIX. I know some of you were trading the breakout yesterday. It's not my style. It's not a quality consolidation. H we have on our list as a short under the lows. MSCI from yesterday. I like it's a long over the high. BlackRock. I don't know if it had earnings or it's just in the news. It said that no, LBS didn't trigger. BlackRock POK 473. This could be a call spread candidate. It's not a spinoff, but the paper said exactly. PNC sold its stake in BlackRock. So PNC, wow, nice gap up. So that is a put spread candidate. Let's put PNC on our list. But it just cracks me up. All this is past tense, right? But they put it on the cover of the journal, and they put it on CNBC, and all of a sudden both stocks gap away. But it's past tense. Nothing has changed. But welcome to trading. That's human nature. So there's our PNC. LBS McGraw. No, LBS was over the high. DDOG, it's the earnings list. Yeah, this is a gap and crap sell setup. Sure. Yeah, let's put that on our list. Absolutely. Yeah, that both for a day trade and a call spread because it's earnings, so volatility is high. Yeah, anything that rallies crazy into earnings and then gaps up, I have a total bearish bias, provided it sets up intraday. You don't just do it blindly, of course. 507, this is a very bullish gap. Put that on the list. Percent-wise, it's huge, but it still has a price void. It still looks good. VEDL on the list. EDL. Hey, Gustav, your drop down. IIVI gapping up 46.50. The gap's too big. But in terms of a gap and crab, I like the other one better. D-Dog. Dish, we're in it, Jake. We're in it long, so I'm not sure what you're asking me. Remember, you got to ask me a question. Cowan, is Cowan on pro? Yeah, I canceled it. Cowan was a long over the high, and yesterday I canceled it. Ivan Tesla. No, it's not a long setup. It's, you know, we have a put spread on it. We had a put spread over Friday's high, which I remember in the morning it had a bear gap down, and I left it because I said if it wants to turn around and take out the high, then let it, and it did. And we actually got price improvement because I'm assuming because of, you know, his going after the county and in the news, whatever, and volatility is rising on the options. But no, there's no setup there, intraday or daily for a swing, in my opinion. Vertex was one, beautiful 1, 2, 3 here yesterday. One of you found for us in the morning. Wide range breakout, beautiful multiple time frame alignment example there. This stock is kind of a drug company, but they're also in the marijuana space a little bit. A big bullish gap, but you know, it's gapping up 10%. 55, here's a gap breakout from a bottoming pattern. Still has a price void. We'll come back to that. 30 minutes. 32 bucks. Here's a gap breakout. Has a little bit more room, maybe target 200. We'll come back to it. This gapping up. Possible gap and crap candidate again. It's gapping up over yesterday's high, but look how far it is from the 20. Steve, square for possible day trade. Yeah, it's holding pre-market. Yeah, keep an eye on that. I think I read they got some financing or something. Square. This thing's been on fire, but that's nothing there for me to do. All right, so Alex is going for the Tesla. Bullish gap Vache. This is a bullish gap on the 15-minute chart over resistance here, and it has a price void, 5-minute high. This could be a day trade long. TDW. It's a bottoming pattern going nowhere. That's another little oil stock. Toyota.